Do you look outside and see a need for change? If so, you're in the right place. Welcome to the You Are the Change podcast, where we talk all things sustainability, social justice, and politics, whatever it takes to create change. We're talking to investors, chefs, teachers, doctors, organizers, shop owners, local politicians. If they care about change, I want to talk to them. Folks, buckle up. Once again, welcome to the You Are the Change podcast. Hi, folks. Welcome to the Viewer of the Change podcast, where the mission is simple. Provide a short, fast-paced podcast with guests that will provide sustainable ideas that you, the listener, can implement immediately. Yes, immediately. Essentially, as fast and furious meets sustainability. Thanks for joining us. I'm going to put the timer on the clock. I want to welcome Gigi Norcross from Green Century Investments. Welcome aboard. How are you, ma'am?
Thanks, Stefan. I'm doing great. Thanks for having me.
Yeah, well, again, just as the objective I always tell folks when I get into it is to keep it short and sweet, try to hit the high points, and inform people as much as possible. And as we get to the end, we'll start talking about, again, anybody listening, what can they do immediately? What can they do when they get off this podcast to actually implement something in their life that's going to have some sustainability or have an impact? Quick shout out to Veg Life Des Moines, Save Lives, Eat More Plants. I figured this podcast would be a good one to say hi to my local group. So thank you guys for what you do. Just to get it going, just tell us a little about yourself and what you do.
Well, as you introduced me, my name is Gigi, and I work with Green Century Capital Management, which is the first family of fossil fuel-free, diversified, and responsible mutual funds in the United States. So our funds allow people to match their investment choices with their environmental concerns and values. And I specifically work with financial advisors who use Green Century's funds, focusing on advisors in the middle of the country. So it's for that reason that I'm lucky enough to work with you, Stefan.
Well, I appreciate that. I did not know that you were the first family. Tell me a little bit about that.
Green Century was established in 1991, and at the time we had two investment products on the market. We have since added a third, but Green Century, given how long it's been here, is the first one to offer a full suite of fossil fuel-free investment choices to those who want to invest their money that way.
And what would that mean to somebody listening? So again, a fossil-free investment. What specifically is that?
Fossil fuel-free for us is central to our investment strategy. So Green Century's funds are fossil fuel-free by a strict definition of what that means. And what that means is that we explore for, or we don't invest in corporations that explore for, extract, process, refine, and transmit coal, oil, or gas. We don't invest in companies that burn fossil fuels to make electricity, and we don't invest in companies that possess carbon reserves. And all of that is detailed in our prospectus. So it's not a label that we put onto our products. It is a definition that is in our prospectus, which then guides all of our investments.
Well, again, I'm sure the next question a lot of folks are thinking is like, well, that's fantastic. So essentially, we're not going to have ExxonMobil's not in there. So any of these fossil fuel companies, major ones that people are thinking about, and probably many more, obviously, that the average person wouldn't think about. But the client question would maybe, and I know this is something that that you probably answer quite a bit. Well, by removing those companies, what's that going to do to my portfolio? Am I taking on more risk, or what type of return am I looking at by removing these companies?
No, actually, you're not. The one thing that is a myth in sustainable investing is that you have to trade your values for performance. Yeah. There's lots and lots of information out there that says that you don't have to do that. There are studies upon studies that show that you don't have to trade your values for performance, and in fact, a fossil fuel free or sustainable investing approach performs at least as well as benchmark, if not better.
Well, it's interesting because, again, I tell folks, again, the quote I use is, far too long we've been sold this line that you can make money in the markets or save the planet, but you can't do both. And that's just a bold-faced lie. Right. And we're seeing that through folks like yourself and some other groups. Well, we had talked about sustainable investing, right? So that's a term that, again, since I've been in this industry, the same as you've probably, it's changed. Social responsible investing, sustainable investing, impact investing, ESG, all these terms kind of get piled together. What would you say you folks are? Would you say you're a social responsible investing fund or an ESG fund or in its own category?
I'd say we are a socially responsible investing product, but just to walk through sort of what those terms means, that there are many different terms that people use to describe this type of investing. ESG stands for environmental, social, and governance factors, which are material risks and opportunities that may affect a company's performance. Sustainable investing is an umbrella term for investments that seek positive returns and positive impact on society, environment, and the performance of the business. Socially responsible investing, to take that a step further, is a way for investors to better align their portfolios with their values. So investors may screen out companies that they don't want to invest in, like tobacco or weapons, and proactively look for areas that they do want to support, like renewable energy and green building development and other things. So sustainable investing considers how E, S, and G factors affect the performance of an investment and their impact on society and the environment. And SRI investing, the next step, allows investors to opt out or in of certain investment opportunities based on whether a company matches up with their values.
You know, that's a great explanation for it. And again, it just my background when I started, again, it used to be more SRI was just more of pulling, blocking or pulling positions from a portfolio that they didn't, negative screening essentially. If I didn't like that company,
Right.
I wanted it out. And now I'm seeing more and more companies, obviously finding companies that, kind of borderline maybe that they'll pull to support, especially in the area of animal welfare has been a tricky one. But I guess just based on those definitions and just on this conversation, if you guys are SRI essentially, not all SRI investments are the same. What separates you folks and what you guys are doing versus some of the other folks out there?
Yeah, they definitely are not all the same. There are roughly 300 funds that claim some degree of ESG focus, and they're not all the same and they're not all equal. Ours are defined in a few different ways. I mentioned already the fossil fuel free by strict definition of what that means and as defined by our prospectus. So that's one thing. We also have an award-winning shareholder advocacy program that engages over 50 companies a year on issues ranging from forest protection to renewables to animal welfare. And then finally, the third part of our approach is we're owned by nonprofit, environmental, and public health organizations. So the profits that Green Century generates from managing the funds belong to those organizations and support their critical campaigns. So we talk about it in three prongs. The first prong is the investments themselves. The second prong is our shareholder advocacy work. And the third prong is supporting nonprofit organizations by generating profits that then go to support their campaigns. One topical example on that last thing is that our owners right now are doing cutting edge work on issues surrounding the coronavirus, including expanding testing and increasing the ventilator supply. That once things changed across the globe, that 3 months ago, the organizations that own us changed their approach. They always work on public health issues, but put all their resources towards that. And we're obviously very proud to be a part of that. So in summary, Green Century's funds are an authentically green investment choice with approach to shareholder advocacy that goes well beyond proxy voting.
And again, this is why I'm just such a huge fan of what you folks are trying to do. And I know I don't want to set you up or get us down a rabbit hole, but I'll throw one out, and if you want to handle it, you can. If not, we can get somebody else. But the shareholder advocacy thing, the shareholder advocacy portion of what you folks do, to me, is so critical. And I think from an investor standpoint, the average investor, it's still a little outside the realm of understanding. So I've done a few talks on it. Again, obviously, I've written a book on it. But this ability, this understanding that there's trillions of dollars of capital out there being invested in companies that most folks probably wouldn't want to support. They're unaware that they're supporting it, or if they are aware of it, they don't know what to do about it. Yeah. So this area of utilizing shareholder rights, shareholder advocacy, I think is just being missed. But I think it's a major space. So I'd love to hear if you want to go down that rabbit hole a little bit. I know some of the things that you folks did with like Costco and trying to put pressure on to create some alternative meats and some others. Maybe you have time, you could share some of what's happening behind the scenes. Again, as vegans, and this podcast isn't just for folks with animal rights, animal welfare, obviously, but for me personally, it's, again, I've always told folks the fact that I go to the store and I don't buy Tyson's chicken is almost irrelevant if I'm going to go to work the next day and then invest in my retirement program and buy Tyson's chicken.
Right.
Or if I am going to buy Tyson's chicken, I own Tyson's chicken. What am I doing with that shareholder right, that right to talk to Tyson's chicken and say, can we make some changes? Can you just touch on that and how that operates and some of the impacts that folks maybe don't know that's happening behind the scenes?
Absolutely. We have a dedicated shareholder advocacy program with a 3-person team that's based in our central office in Boston, Massachusetts. And between those 3 people, they split up the lay of the land as far as issue areas go to really cover a lot of ground over the course of a given year. And as I mentioned, we do on average 50 engagements per year. We think of proxy voting as a baseline. If you're a mutual fund, that's your responsibility. You shouldn't pat yourself on the back for voting your proxies. You should do that and then take it a step further, which is what we do. Some examples in the last year on our engagements. You mentioned our work around protein products and animal welfare. We pressed Kraft Heinz to adopt a long-term strategy to diversify its protein products. Prior to our engagement, they were really very silent on the issue of protein products and diversification there. It was our engagement that motivated a big company like Kraft Heinz to finally get on board. We also helped convince Costco to offer non-GMO plant-based burgers. Some other things in this last year that I'll mention, we secured zero deforestation policies from Tyson Foods, Kroger, Aramark, and Kellogg. These are large companies with great impact on the issue due to their scale. Tyson, as you know, you were just talking about them. It's the world's 2nd largest processor of chicken, beef, and pork in the world. Kroger is the largest supermarket chain in the United States. So securing zero deforestation policies from companies of this scale is huge for the issue of addressing the problem worldwide. And then Verizon Communications is one of my favorite engagements to talk about. Largest telecommunications company in the United States. Our engagement resulted in them increasing the amount of energy it sources from renewables from 4%, where they started at the beginning of the engagement, to 50% by 2025. So they were like, we're going to do 4%. And we said, that doesn't seem so good. Let's take that up a bit. And where we landed was 50%. And so just to put some numbers on that, that action will prevent the annual release of approximately 2.3 million metric tons of carbon dioxide. That's the equivalent of taking nearly 500,000 cars off the road.
Wow. Folks, I hope as you're listening to this, and I know some of this, maybe it's not aggressive, I'll just try to give a little piece of background on it. Again, what she's reflecting on a mutual fund. So as a shareholder, if I go buy a stock in Tyson's Chicken and I have so many $1,000s of that, I get a voting right in that company. I own that. I'm an owner of that company. I have some rights to that ownership. What happens though is most of you folks listening own what's called a mutual fund, right? So a mutual fund could have several stocks to hundreds of stocks inside of it. But what happens is whoever's, and please correct me if I'm wrong here, but whoever's managing that mutual fund, not you, whoever's managing that mutual fund may own the Tyson's Chicken, all these other stocks, and they have the opportunity to vote this proxy voting. So that mutual fund manager or that team, they're representing everybody that owns that mutual fund, which is pretty broad. I mean, we may agree on things and we may disagree on things. So the fact that this one person may have all of our interest in heart is just unlikely at best. So, and again, correct me if I'm wrong, my understanding is the majority of these mutual fund managers, if they're even voting in these proxies, right, if they're even engaged in shareholder advocacy, the majority of them are usually siding with management, is my understanding, or it's pretty simplistic votes. They're not getting in there and utilizing those funds or those votes to really make an impact like you folks are doing. Is that a fair summary?
I'd say that's fair to say.
All right. And I know some other groups are trying to step up, but again, the fact that you folks are taking this to that level is fantastic, because that's where real change happens. We talk about it here all the time. Again, Facebook, social media, all this. It's easy to get on there and make some complaints, and I don't like this. You really want to change corporations, you've got to get in there and take it over to some degree, right? You've got to be involved book. You've got to have communication with them. You got to hit them in the wallet, and that's how real change happens. So that's fantastic that you folks are doing that. You had mentioned animal welfare, animal agriculture. I know that's something as a fund company you guys have made some adjustments or moved in a direction on. Can you tell us about that?
Well, we actually have quite a few engagements that are focused around that issue, and we're also finding that there's a good intersection between care for the environment and care for wild places and wild animals that live within it. I don't know if you saw this article, but Bloomberg News published an article in April with one key takeaway being that investors can reduce both environmental and pandemic risks in their portfolios and out in the world by dumping companies with factory farm products or are engaged in deforestation. So there's an increasing link between how deforestation is another way that wild animals are threatened and what that means for public health.
In what direction are you guys as far as animal agriculture and factory farmings in your portfolios? Are you folks screening for those? What are you looking for, and what type of issues do you see related with that?
Yeah, we don't have, one of our funds, the Balanced Fund, it screens specifically for factory farms. So factory farming it is one of the things, if it's a factory farm, then it's not in. The other two funds don't have a specific screen on that, but what we found is that, and we don't need to get too far into the weeds on our screening methodology, but one central component to it is that we take scores based on ESG factors, and companies have to meet a certain score in order to get in.
Sure.
And so what we know is that higher performing companies tend to be better performers and more responsible actors on a range of issues, including the environment and including animal welfare.
Well, I just think that step, again, with the one fund of screening or looking for issues related to factory farming is just a gigantic step. A lot of folks that listen to me babble on occasion know that obviously, again, animal welfare, animal rights, and that is an issue of mine. But mostly because, again, it's recent to me over the last 4 years, but it's because of my impact or my contact with these factory farms and seeing what's happening there. That
Yeah.
it's tough. It's tough to work with. So the fact that you guys are moving that direction, because again, I think more and more fund companies are seeing this as an environmental issue. So for me, I could see it as an animal welfare, animal rights issue, but it's now become blatantly obvious that it is also an environmental issue. So it's fantastic that you guys are leading the charge, because there's almost no other fund companies that I'm aware of. I mean, we have Beyond Investing, which is just a vegan ETF. Which, pros and cons on that, that's a whole other discussion. But as far as social responsible investing funds, I don't know of any. Carner Blue Capital, maybe. I mean,
Sure.
they're specifically for animal welfare. But outside of that, it's just really difficult. To the fact that you guys have found some space for that is fantastic. What's the future sustainable investing look like for you? So again, it's a term that you and I have probably seen evolve over the last 10 or 15 years. It's kind of gone in and out. First it was Calvert, and it seemed more of a religious affiliation, and now it seems to be churning and evolving and moving rapidly. What's your perspective on what's going to happen here moving forward?
Yeah, well, it's a big question, future of sustainable investing. And we like to think it's bright and here to stay. Flows to ESG funds have been increasing for a while, sharply increased at the end of last year. And those sharp increases continued through the first quarter of this year. When Larry Fink says he is putting addressing climate change at the center of BlackRock's investing strategy, you have to think that this is not a fad.
Yes.
And then also, as millennials hit investing age, values-driven investing will likely become even more pronounced. So all of those things kind of map out a here to stay sort of answer to your question. I will also say that greenwashing is a thing. Slapping an ESG label on an investment product is not the same as a fund divested from fossil fuels or a shareholder advocacy program that actively engages companies and presses for meaningful reform. So we anticipate that there will be more sophisticated tools for evaluating truly authentic products from marketing ones as we move forward, and we obviously welcome that.
Well, greenwashing is a great term. And again, folks that are listening, I try to be a completely objective and unbiased here, but to me, the goal is always how do we take our capital and utilize it in the most efficient way possible. So again, if I'm going to another fund that is greenwashing, and I know there's lots out there that, again, they may do some ESG screening, but they're not involved in the shareholder advocacy. They're not supporting the nonprofits. So all dollars being equal, a dollar to this company that's just going to invest it, or a dollar to this company that's not only going to invest it, but also be engaged in shareholder advocacy, the community, and nonprofits is a no-brainer. You're multiplying what your investment dollar is going towards. So that makes you folks a no-brainer on a lot of fronts if it makes sense for folks. So how can people learn more about you? How can they get involved in it? How can they, again, learn a little bit more about your investments and see if that's a good fit for them?
Well, they can visit our website, which is www.greencentury.com. But then I would also recommend that you survey the lay of the land. I'm obviously biased, but there are lots of resources out there that can help you evaluate a good ESG fund that matches your values and your investment priorities. And so just a few tips there. I'd say get familiar with the terms. We've talked over the course of this conversation about ESG, sustainable investing, impact investing, responsible investing. Those are all terms that are used in this space, so get familiar with those. Secondly, be clear on your investment objectives. If investing green is your thing, then we might be a good choice for you, but be clear on how funds might be different in their approach to fossil fuels, for example. Know that the argument that ESG investing means trading for performance for values is a myth. We've talked about that. There's lots of information out there that supports that an investment approach that favors sustainability performs at least as well as benchmark, if not better. And then consult some unbiased resources to guide your choices. Morningstar and ussif.org are two good starting points.
This is a great point. I'll do just a quick plug for the book. Obviously, guys, I give you a copy of the book. I don't care about that. We're not trying to get rich off the book, but we go through that in detail. Again, the different terminology. The SIF's website for their mutual fund screening tool is fantastic. Again, you can really go through this tool and find out what are some areas that you have interest or concerns on, and find out what funds may be aligned with that or not aligned with that. I'm always going to recommend speak to a professional, but if you're interested in sustainable investing, find somebody that's down that rabbit hole. Same thing as ESG funds and social responsible funds. Not all advisors are created equal. I'm not perfect for everybody, but if you're interested in social responsible investing, find somebody like me that has an interest and a passion for it and has some information on it. I would ask you what the average listener could do right now to make an impact. I think you touched on some of that, but if you have any other closing thoughts, again, I appreciate you coming on. That was an eye-opener to me in a lot of areas. I thought I knew you folks. I know significantly more about you, and I'm definitely going to be incorporating you in the portfolios that we use for those reasons. Again, that dollar is being more utilized in your direction than some other directions, so we want to take advantage of that. But again, in closing, what can some folks do maybe outside of just investing, just sustainable ideas, or any ideas or anything you'd like to leave in closing?
Well, I'd say just thanks for being here, Stefan, to you, to providing this resource to people. There's a lot of information out there, and a lot of information that frankly can get kind of confusing. So it's good to have people that are just kind of well-grounded in, I want my investment dollars to match my values, because my values are sort of what drives a lot of other things in my life. So thank you for providing a resource to people who are trying to survey a terrain that can get kind of complicated. And then to your listeners, thank you for being here. You don't have to do the research. You are, and keeping your investment dollars out of things that are bad and using your position as a shareholder to advocate for change is a powerful, powerful thing. And so obviously we support that and hope to continue growing people that choose to invest their dollars this way going forward.
Well, I don't think there could be a better time. We've had a lot happen in the last few months, but again, at least where I'm at, I've seen just an amazing outpouring towards the community, supporting the community with dollars. That's another form of social responsible investing to me, or impact investing. We're trying to help communities, we're trying to help businesses stay alive and stay afloat. So to me, I think we're right. It's time. Folks are understanding this concept that we can use our dollars to make an impact. So thank you for taking the time, for joining us. And folks, as always, I say, don't just invest to make an impact. And thanks for joining us. Have a great rest of your day. Folks, thank you so much again for joining us on another You Are the Change podcast. Please follow us online at youarethechange.net. Again, that's youarethechange.net to learn about upcoming guests, future speaking engagements, to grab a copy of your book, and to check out other events. Again, youarethechange.net. And if you're involved in sustainability and think you'd be a great guest, please reach out. We'd love to speak with you. Folks, thank you again. Have a great rest of your day.